I'd like to start this video off by saying I am not a financial advisor. Should you choose to invest in Bitcoin or any other asset, to do your own research or seek the advice of an actual financial advisor. Now, I'm gonna be going over something a little bit different today, and that is the EMA ribbon. And I'm sure you all know what the EMA ribbon is. It's a plethora of EMAs, and depending on whether or an asset is going uphill or downhill, depends on whether these are red or green or whatever color settings you have them, bearish or bullish. And when the price crashes, these EMAs, they all tend to cross each other, and then they start going in the opposite direction, and they align themselves according to the trend. Now, people, that's a good way. It's a good tool to find out if the trend reversal is happening or whatever. People also use the 200 daily moving average to determine whether an asset is in a bull market or a bear market. So why not use both? Right here we have the EMA ribbon and the 200 daily moving average. As you can see, let's go back to the beginning of 2019 here. The EMAs they all crossed bullish, and then we started going uphill, and the 200 daily moving average went under all of the EMAs, and of course we had a small bull run. Now the China pump, you could see all the EMAs turn green, but the 200 daily moving average didn't go underneath all of them. It was a failed reversal, and it ended up going back red, and here we are now, where the EMAs are starting to turn green. They're starting to cross, and they're starting to go uphill, and the 200 daily moving average is on its way down. That is a good sign. That means that if we keep this upward trend going, even if we do end up correcting a little bit here and there, and as long as we keep on going in a general upwards direction, these will all cross bullish, and the 200 daily moving average will move underneath of all of them. And that is just an extra confirmation that this reversal has been completed. And yeah, I've been trying out some different indicators, trying to mix them up together just to see what I could do with them, and this seems to be a good telltale sign that we may in fact be starting the next bull run. Of course, we have to give this some time to play out to see what happens here, to see if the 200 daily moving average does end up underneath of all of the EMAs as the EMAs become parallel to one another. And if that happens, then I'm going to say, fuck yeah, the bull run has started. Okay, so now I got rid of the ribbon for now and brought up the triple EMA, which is the 50, the 20, the 50, and the 200 exponential moving average. And this is on a daily time frame, of course. I wanted to bring this up because I wanted to show you guys that we have in fact had 3 golden crosses and are currently having a golden cross with the 20-day EMA and the 200 daily moving average. This triple EMA is in a bullish alignment as of, I think, like 2 days ago. We have the smallest at the top leading to the largest at the bottom, and that is a bullish alignment of the EMAs. And of course, the 200 daily moving average is still above all of them. So, but if we keep an uptrend, these will all cross, and that could be another way you can confirm the reversal has been complete. If you don't want to wait on the trip, well, I'm pretty sure that EMA ribbon would actually confirm the reversal before these EMAs would, because we have a 200 EMA on this triple EMA, and the highest EMA on that EMA ribbon was a 150 exponential moving average. So this one will take a little bit more time to confirm, but it's another way to confirm that this reversal has been complete if you want extra confirmation. mixing these moving averages together can work wonders, and it can make you avoid going long in an area like that. I mean, yeah, if you went long down here and you sold like in this area, yeah, you made decent profit. Actually, I went long right here because I heard that news, and I think I sold roughly up there because I was getting a little bit edgy with that. I didn't think it was going to go too much further, and what do you know, it didn't go too much further, because I think I sold it like 9,900 something, if I do remember right. But yeah, so for those of you looking for more ways to have confirmation that the reversal has in fact happened, has been complete, moving averages do some fucking wonders. Alright, moving averages aside, there's something else I need to point out. Actually, Bitcoin has been trading sideways for the last couple of days, last like 5 days, 6 days, and I've seen people saying that it's a bull flag that Bitcoin has been forming. Personally, I just don't see it. I mean, on the smaller time frames, you can see where Bitcoin has kept in a bull flag trend, but it had a fake out and a fake out and a fake out, and there's just too many fake outs for me to believe that is a bull flag. And so I think it's something else. I think that it is actually a symmetrical broadening wedge. Now, unfortunately, when it comes to symmetrical broadening wedges, they're really not too predictable as to which way they're going to break out. These have just as much chance of breaking up as they do breaking down. But I've mentioned quite a few times before that we are due for a correction, so if it does break down, I would not be surprised. And like I said, if we do have a oh, that's nice, my phone's fucking dying. If we do have a downward break, if we do have the if we drop, we will likely come to the 200 daily moving average again, and hopefully test this support, and then move on back up, and then attack this resistance again, and maybe break it and come up to the 10K area and start attacking that. Of course, the fact that this is a symmetrical broadening wedge, if it is one, it also has a chance of not breaking down. It could just break up and go straight for the 10K and start attacking it right then and there. And then at that point, it could have its correction and either come down to this point or the 200 daily moving average and bounce, and then go back up to 10K from either spot. So there's a couple scenarios that can happen here. It's either maybe I should draw these out in different fucking colors. So, alright, scenario 1. And scenario 1, we break down, hit the 200 daily moving average, break back up, we could break it on the first try, or it might take us a little while, but let's just go by first try. And then we come back up to the 10,000 and start attacking. Okay, well, I kind of fucked that up. Yeah. Okay, so we went to the 10,000, start attacking. Scenario 2, we end up breaking up and then getting rejected, coming back down to either hit this resistance, but we end up bouncing and going back to the 10,000 to hit it again. And scenario 3 is where we break up, then we come back down, but we break down through this resistance here and end up coming down to the 200 daily moving average, and then going back up, breaking back through this, and then going back up. I mean, those scenarios may not exactly happen like that, but that's the way. Those are the ways that I can see this going. So there's a correction due any moment now, and all three of these scenarios include a correction at some point. It's either gonna happen after we leave this pattern that we're in now, or it's gonna happen after we get rejected by the 10,000 resistance area. So We just have to wait and see what happens. And with that, that's all I have for you guys. I will see you all next time.